Welcome back, and thank you for tuning into Supernova Stock Watch. In the world of finance, there are both bullish and bearish trends. For investors, there has never been a better time to profit from global market trends than right now. That's why exchange-traded funds are so great. They let you take advantage of the market's highs and lows. In today's video, we are looking at ETF ticker MOO, going to point out their top 10 holdings and analyze 2 stocks within the fund as examples on finding strong performing stocks. ETFs have grown more popular over the past few years. ETF simplifies the accounting and tax process by requiring much less to be done. They also offer affordable expense ratios compared to mutual funds, which often make them a better choice for investors. The popularity of ETFs is rapidly increasing because they are designed to track a particular index, sector, or currency. ETFs are available for every type of market data. There are over 10,000 different types available for tracking almost any index. One of the advantages of ETF investing is that you can easily see which stocks are outperforming the market, which you wouldn't be able to do with a traditional tracking stock. A good example of a currently successful investment is the VAN EC ETF ticker MOO. VAN EC Agribusiness ETF MOO seeks to replicate as closely as possible, before fees and expenses, the price and yield performance of the MVI's Global Agribusiness Index, which is intended to track the overall performance of companies involved in agri-chemicals, animal health, and fertilizers, seeds and traits, from farm and irrigation equipment and farm machinery, aquaculture and fishing, livestock, cultivation and plantations, including grain, oil palms, sugar cane, tobacco leaves, grapevines, and trading of agricultural products. Those seeking exposure to companies that derive at least 50% of their revenues from the agricultural business should consider this ETF. Although the fund seeks to provide global diversification, more than 50% of its assets are invested in U.S. markets. The agricultural sector in the United States is still expected to gain from the signing of the Phase 1 trade deal in January 2020. Under the deal, Beijing has agreed to raise its U.S. agricultural product purchases to $40 to $50 billion in each of the next 2 years. China has been an important market for soybean exports to the United States. Also, the United States-Mexico-Canada deal can support the U.S. agricultural sector. Moreover, the coronavirus vaccine rollout, fiscal stimulus support and reopening of global economies can support the fund. The fund has 54 holdings in its fund and with a 58% allocation to its top 10 holdings. From a geographical perspective, the United States with 57.6%, Germany with 7.7% and Canada coming in at 6.2% are the top 3 allocations of the fund. From a sector look, consumer staples make up 26.8%, materials with 25.1% and healthcare with 24.9% are the top 3 allocations. VAN EC MOO ETF is trading near all-time highs. Looking at a weekly chart, it has been consolidating since last May. We saw a false breakout in late October, but now MOO is back on track as it breaks above the upper end of its trend line. Breaking new highs are an indicator of the strength of the fund's stock portfolio. To keep this video short, we are going to list the top 10 holds and only analyze 2 stocks within this group. By investing in companies from ETFs that are trending in an upward positive direction, your probability of finding successful stock picks greatly improves. Top 10 holdings within the MOO ETF fund include Zoetis, ticker ZTS, US. Deere & Company, ticker DE, US. Bayer AG, ticker BAYN, GR, which is a German stock. IDEX Laboratories, ticker IDXX, US. Nutrien, ticker NTR, US. Corteva, ticker CTVA, US. Archer Daniels Midland Company, ticker ADM, US. Tractor Supply Company, ticker TSCO, US. Tyson Food, ticker TSN, US. And Kubota Corporation, ticker 6325, JP, which is a Japanese stock. The 2 stocks we're looking at today include Deere & Company, ticker DE and Nutrien Limited, ticker NTR. Deere & Company, ticker DE. Illinois-based Deere is the world's largest producer of agricultural equipment, manufacturing agricultural machinery since 1837 under the iconic John Deere brand with its signature green and yellow color scheme. Beginning fiscal 2021, the company has 4 reportable segments: agriculture and turf operations, which generated around 63% of Deere's revenues in fiscal 2020, has been divided into 2 new segments. The Production and Precision Agriculture segment is responsible for defining, developing, and delivering global equipment and technology solutions that cater to production-scale growers of large grains, small grains, cotton, and sugar. The Small Agriculture and Turf segment will deliver products to support mid-size and small growers and producers globally, and turf customers. It will cater to production systems for dairy and livestock, high-value crops, and turf and utility operators. The construction and forestry, consisting 25% of revenues in fiscal 2021, segment manufactures machines and service parts used in construction, earth moving, material handling, and timber harvesting. Deere also manufactures and distributes road building equipment through its wholly owned subsidiaries of the Wargan Group. Reasons to buy. Corn and soybeans are the most important grains for cash crop farming in the United States. Corn prices have gained 21% in a year. Demand for ethanol, which is a corn-based fuel, and fears of supply disruptions due to renewed lockdowns will support prices. In China, corn usage is anticipated to rise as local wheat prices are trending higher than corn, making wheat expensive to replace corn in animal feed. In northern Brazil, rain slowed down early harvest. Owing to high fertilizer prices, farmers are opting for soybean as it is a less fertilizer-intensive crop. High commodity prices will drive farm income and persuade farmers to continue spending on agricultural equipment. This in turn will drive Deere's top line. Apart from this, the need to replace aging equipment will sustain demand. Deere expects demand for farm and construction equipment will continue to be supported by positive farm fundamentals, including favorable crop prices, economic growth, and increased infrastructure spending in fiscal 2022. It has been witnessing improvement in the construction and forestry segment. North American earth-moving and compact construction equipment industry sales are likely to be up between 5 and 10%. Forestry equipment sales are expected to be up 10 to 15%, as lumber demand remains robust. Sales for the construction and forestry segment are projected to be up 10 to 15% and operating margin is likely to be 13.5 to 14.5% in fiscal 2022. Demand for earth-moving and compact construction equipment will exceed Deere's production this fiscal year, resulting in low inventory levels at the end of fiscal 2022. The production and precision agriculture segment sales is expected to be up between 20 and 25% in fiscal year 2022. The segment's operating margin is expected between 20 to 21%, reflecting solid financial performance across the various geographical regions. The company expects industry sales of large agricultural equipment in the United States and Canada to be up roughly 15% for fiscal 2022, reflecting strong demand. Strong commodity prices, record production, and a favorable currency environment continue to boost farmers' income, leading to improved orders. Despite limited government-sponsored financing programs, private financing is supporting continued strength in equipment demand. Deere remains well poised for growth over the long term, backed by steady investments in new products and geographies. The company will benefit from concerted focus on launching products with advanced technologies and features, which provides it a competitive edge. These investments will aid its customers achieve improved profitability, productivity, and sustainability through the effective use of technology. It remains focused on revolutionizing agriculture with technology in an effort to make farming automated, easy to use, and more precise across the production process. The company is seeing strong demand from its new product launches like Exact Rate Planter applied fertilizer systems and AutoPath. AutoPath will strengthen automated farming in the future with its new features and technologies as part of the company's precision agriculture software package strategies. Deere acquired Bear Flag Robotics, which develops autonomous driving technology compatible with existing machines. The acquisition underscores Deere's smart industrial strategy to deliver smarter machines with advanced technology. The combination of Deere, Blue River, and Bear Flag positions automated farming as a key opportunity for creating value for the company and its customers. Farmers' growing reliance on advanced technology to run their complex operations smoothly will continue to fuel Deere's revenues. Deere expects net income for fiscal 2022 between $6.5 and $7 billion, compared with $5.9 billion in fiscal 2021. Demand for farm and construction equipment will continue to be supported by positive fundamentals, including favorable crop prices, economic growth, and increased infrastructure spending. However, supply chain pressures will persist. Bottom line. Deere shares are up 7.9% in the trailing 6-month period and up 27.1% in the trailing 12-month period. Over the past 6 months, stocks in the manufacturing, farm equipment industry and industrial products sector are up 6% and 0.3%, respectively. Over the past 5 years, the stock has traded as high as 32.36 times and as low as 11.13 times, with a 5-year median of 17.55 times 12-month earnings. Analysts believe the stock will perform in line with the market. Analysts also project a short-term price target of $399, reflecting a 17.45 times forward 12-month earnings. Now, looking at the second stock is Saskatoon, Canada-based Nutrien Limited. is a leading integrated provider of crop inputs and services. It supplies growers through its leading global retail network and operates more than 2,000 retail locations across the United States, Canada, Australia, and South America. The company plays an important role in helping farmers around the world increase food production in a sustainable manner. It produces 3 crop nutrients: potash, nitrogen and phosphate. Nutrien makes and distributes around 27 million tons of crop nutrients from its facilities in the United States, Canada, and Trinidad. At the end of 2020, its potash operations accounted for 21% of worldwide potash capacity. Their Nutrien Ag Retail Solutions segment distributes crop nutrients, crop protection products, seed, merchandise, and agronomic application services and solutions through more than 2,000 retail locations. The division accounted for 71% of revenues in 2020. The potash division engages in the mining and processing of potash, which is mainly used as a fertilizer. The company markets potash outside the United States and Canada exclusively through Canpotex Limited, which is equally owned by Nutrien and another potash producer in Canada. The segment accounted for 10% of revenues in 2020. The nitrogen division produces nitrogen products from company-owned production facilities. These products include ammonia, urea ammonium nitrate, diesel exhaust fluid, nitric acid, and ammonium nitrate. The segment accounted for 11% of revenues for 2020. Reasons to buy. Nutrien Limited should benefit from solid demand for fertilizers, especially potash, supported by strength in the global agriculture markets. Strong grower economics is driving results in its retail business. It is also expected to gain from strong potash sales volumes this year on the back of solid domestic and overseas demand. The company is gaining from higher net realized selling prices for crop nutrients as witnessed in the most recent quarter. Potash prices have strengthened on the back of robust global demand, aided by strong grower economics, higher crop prices and low global inventory levels. Tight availability along with firm demand is also driving up phosphate prices globally. Nutrien Limited is also well placed to gain from acquisitions. The company continues to grow its footprint in Brazil through acquisitions, including Tech Agro. Recent acquisitions in Brazil are driving sales in its crop protection products. The acquisition of leading agricultural retailer, Tech Agro last year has expanded the company's foothold in the growing Brazilian agricultural market. But higher natural gas prices are also likely to weigh on margins. Raw material cost inflation and high debt level are other concerns. Bottom line. The company raised its adjusted EPS and adjusted EBITDA guidance to $5.85 to $6.10, previously $4.6 to $5.10 and $6.9 to $7.1 billion, previously $6 to $6.4 billion, respectively, for full year 2021. It expects strong demand for crop inputs in the fourth quarter as well as tight global fertilizer supply and demand fundamentals to continue into 2022. Over the past 5 years, the stock has traded as high as 35.48 times and as low as 6.06 times, with a 5-year median of 11.15 times forward 12-month earnings per share. Analysts believe that the stock will perform in line with the market. Analysts also project a price target of $73, which reflects at 8.36 times forward 12-month earnings per share. Let me know what your thoughts are on reviewing strong performing ETFs for stock picks. What do you think about the 2 stocks we quickly reviewed? Are they a buy, sell, or hold? I enjoy sharing my insight with you and helping both of us become a better trader and investor and finding some level of success. You have made it to the end of my video. Thank you for watching. See you next time. Peace.